welcome to Big Conversations by Ordinary People podcast.
Yeah, thank you for having me.
Yeah, so Benue, is that the right way to pronounce the farm? Benue?
It mostly depends.
Uh-huh.
West Africans pronounce it as Benue.
Benue?
Yeah, and then people from East Africa pronounce it as Benue. And I
Benue.
think, yeah,
Okay.
it's mostly because there is a state in Nigeria called Benue, and I think a river called Benue. So for them, it's easier to pronounce it. I think for us, we just pronounce it the way we just see it, probably.
Already. Okay, so the name itself is West African.
Yeah, I think the founders of the farm are probably very interested in African history because River Benue is where the Bantu migrated from. So I think they just decided to call the farm, after River Benue.
I see. Yeah, let's talk about these founders. Where are they from?
So Benue Capital is founded by Ugandans, and they are Ugandans in the diaspora. So these are Ugandans that have been in Silicon Valley, in New York, working either in finance, in startups, or in venture capital. And so they decided to come together, to start this farm so that they can be able to invest in mostly Ugandan startups. But obviously, it's not limited to Ugandan startups because if you find a good startup from Nigeria, from South Africa, from Egypt, or Kenya, we are still going to be able to fund it. But I think the main issue was that there are no VC farms in Uganda. And a lot of people are building startups. But then when it comes to getting money, it's actually easier to get the bigger funding rounds. For example, if a startup is looking for maybe $1 million or $2 million, it's a little bit easier for the startup to get that funding because they can fly to New York, or they can fly to Nairobi or to Lagos, and they can get that amount of funding. But then to be able to get 1 million or 2 million, chances are that you have to raise the smaller funding rounds. So you may have to raise maybe 25,000 or 50,000 or 100,000 at some point. And the only option right now is before people building is they are looking for grants. So maybe an impact program, maybe like MasterCard Foundation or
The UN or something.
all these organizations that are pulling some grants through, or maybe winning some competitions. But then the problem with that is that people end up being probably grantpreneurs, moving from one grant to another without the startup actually truly growing, because the people that provide grants or the people that put up these competitions where people can win money do not necessarily provide venture building. So venture building is like the strategic guidance for the startup over a long period of time. So they don't really provide that kind of services. So startups maybe just don't truly reach their potential even when they raise grants.
I see.
But I think the thing with a VC farm, an early stage VC farm, is that we not only provide the money, we provide the mentorship, and this is based on the fact that we have people who are experienced in building startups. And they've seen startups, they've invested in startups in Africa, in Nigeria. They've also invested in startups in much more advanced ecosystems like Silicon Valley. So when they pull that knowledge and their network and their experience, and then they provide this kind of venture building for the startup, it makes the journey less intimidating. So I think the founders of the farm were very, very passionate about that. They wanted to provide the money, but they wanted to provide venture building so that the quality of the startups that is coming from Uganda is better than before. So I think that was the major reason as to why we launched this VC farm in Uganda.
I see. How big is the current portfolio?
So we are looking for our first startup.
Oh, okay, nice. We are good candidates. So yeah, give us all your money and we do good things. So yeah, okay. Let's talk about like the VC concept, right?
Yeah.
I myself have been employed by a couple of Silicon Valley companies. So when I'm not doing this, I do some coding.
Okay.
And one thing that has, I don't know, the word maybe is mesmerized, is how much money these companies burn, right? So I'm an entrepreneur myself, and I run this venture.
Yeah.
I'm very, very, most of the guys who work here know that when it comes to money, I give them very long stories, right? But most of these places where I've worked, people are so ready to spend, right? You want to go to, say, to the US for conference, talk to your manager, they buy you the stuff, it seems like money is readily available. And most of these never make any money yet, right? So by the time, most of like I've worked for a few that are actually making profits, but a couple I've worked for haven't yet reached the phase where they make profits. The products are promising, but they're mostly spending venture money. Yeah, I want to understand basically, as a funder, in this case, how do you help startups manage their actual money? How do they manage the burn? I think burn is the word that they use, right?
The burn rate. Yeah, the thing about startups is that sometimes startups throw away all the basic principles of business, and they try to operate they build their own principles and their own rules. So, as ideally, what a VC offers you money so that you can be able to grow at the speed you want, because the scenario for most businesses, like the regular businesses, that you reinvest the profits, you reinvest the revenue that you're making, and sometimes it can take you maybe 10 years to grow to the level you want to be. But then when you get VC money, it shortens that amount of period from maybe 10 years to 2 years or something like that. But the issue is that, especially in Africa, I think in the US, it's understandable for a startup to try to grow at all costs. So basically, throw money at everything and see what works. But then, I do believe that in Africa, startups have to be a little bit more cautious, and they have to, to function more like the basic businesses. Which the basic business principles, because the African market is much more different from the developed market. So in the US, you can throw money at because when you throw money at something, they hope that the rate at which you grow at some point, the revenue that you're making is going to overtake your expenses. But then in Africa, it probably is going to take you much longer, because when you're building a startup in the US, let me just say you're building an e-commerce business, you don't need to explain what e-commerce is. Credit cards are already in place. The logistics are sorted. People have addresses. You can't even get lost. Like, the basics of the business are already in place. The startup doesn't need to invest in that. But when you come to Africa, you have to explain how e-commerce works. You have to show people that they can trust you to make a delivery. And then you have to figure out the logistics, because I don't think Posta Uganda can help you very much. You have to figure out the payments, because, Visa, MasterCard, it's not, the penetration rate is low. So you have to maybe use mobile money or build your internal payment platforms. But you can't just throw money at this, because in Africa, it's going to be very, very difficult for you to recover the money. For example, if I'm just say, maybe just give a use case of Jumia. Jumia raised almost, I think, $800 million, in funding. And then they grew so fast. I think at some point they were in maybe 15 African countries, which was, I remember reading an article, I think 4 years back or 5 years back, about the founders, one of the biggest investors of Jumia at the early stage. And there are some chaps from Germany, they were called Africa Internet Group. So, and these guys, I think it was started by a German brothers, Oliver someone, I've forgotten his brother. And these guys went to Silicon Valley. They saw what was working in Silicon Valley, then they decided to replicate it all over the world in different continents. And one of the things they emphasized was Blitzkrieg. So Blitzkrieg was the German term the German Nazis used when, I think in German it's lightning fast. So basically the Nazis used to go to an area, they sweep everything in 1 week or 2 weeks, and that the war is done in that area, then they move on to the next. So they preached, Oliver Samoa and his preached Blitzkrieg to the companies they funded. And so they told Jumia, move fast, grow fast, go to Kenya, go to Uganda, go to Tanzania, go to Rwanda, just go to any country. But then after you've raised almost 800 million, you've invested in multiple countries, you start to realize that, okay, the market is not going to catch up as fast as you thought it could. And then you start scaling back. So why I'm bringing this story is that, like Jumia has been withdrawing from multiple markets and throwing out some sections and some fields that they're doing and closing some operations. But what I'm saying is that you can't grow as fast. You can't throw money at everything in the Silicon Valley style in Africa. You have to be a little bit more cautious and operate more like using the basic business principles. You know, even not, it's not just Jumia. You can also Safe Border scaled to Nigeria, scaled to Kenya. They exited both markets. There are so many companies that have tried to replicate that, but you have to realize that the market you're operating in is a little bit different. Internet penetration is still low. People still use basic smartphones, and feature phones are actually, the biggest. The biggest percentage of people that own phones in Africa actually own feature phones. So you have to understand that the market you're operating in requires you to mirror the basic business principles. Slow down, don't grow as fast as Silicon Valley, because even in Silicon Valley, you can't say that the model has worked with astounding success. I mean, Uber is not yet profitable. They've been in the market for maybe 15 plus
is it
years.
not? I thought it was profitable.
It went public, but I think they've struggled. Airbnb struggled for a little while as well. I think they've picked up. When you look at the likes of WeWork, but I don't think maybe WeWork just had bad business principles. So a lot of companies that have employed that same model in the USA have still struggled. So in Africa,
So I think though that the difference is less about the geography of it. That's again my impression, because if you look at Uber, right?
Okay.
If you look at WeWork, the examples you're giving. If you look at Airbnb, WeWork, almost the same thing for me. If you look at Facebook, if you look at even Amazon, for example, right? These were innovative when they were started, right? So they have that edge of being maybe not the newest in the market. If you look at Google, for example, maybe not the first in the market, but they come with this innovative edge, right? What Jumia does is thinking that they can throw away the part that makes Amazon work, the innovation, and sort of copy what Amazon is doing and throw money at it, right? And what makes them fail is because I can do the same. And the fact that I'm Ugandan, I can do it cheaper, right? I can probably, I don't have to compete with Jumia, I don't have to beat Jumia, but I can give them a I can give them a hard time to maximize the market share, because I think when you, what you're talking about around growth investing is the aim, say for WeWork, was take the market share and let us figure out how to be profitable after that, right? Because then it will be hard for smaller companies to compete, right? That's what Facebook is doing, basically. Acquire anyone who tries to compete so you can retain the market share, and we can figure out later how to make whatever you've acquired profitable. But the innovation part, right? The thing that makes WhatsApp. You can create a chat messaging thing. It's not going to be WhatsApp, not because WhatsApp has like a lot of money to grow. It's because WhatsApp came with that investment. It has grown with its users, and they feel that it's a comfortable messaging service to use. And in Africa, that's what's missing, right? And that is like, again, I've not talked to venture firms yet, but I've been talking to angel investors, the thing we're doing here. We've had plans with it, for example. And you talk to like individuals who have money, who are willing to invest in projects in Africa, and they want you to tell them what you're doing, how it looks like something in the US, right? So that's the conversation. We're building a place where if we have enough money, we can automate podcasting. Podcasting is becoming a real thing. For example, this is what we tell people, right? I'm just giving you an example. Podcasting is becoming a real thing. We want to build a self-service studio. So a person comes, they book a time on an app, they come and do their podcast, then they leave. It will be green screens, so then we can design their backgrounds automatically the way Zoom calls are done. Things like that. And tell them this is something we already have invested in. We are somewhere, but we need some significant amount of money because a lot of it requires some hardware. And they're like, so first tell me how that looks. Is there anything in the US that looks like that, so I can have a clear image, right? So it's from my perspective, right? There's always been people who have the money just don't trust that Africans are rigging enough to build things. But then when they invest in things that are being copied in the US, it's cheap because anyone else can copy, right? I think this is the same thing that happened in China, right? Except China has their politics that sort of insulates them from the problems you've mentioned, right? In China, it's hard for, say, Amazon to just set up. So if you're in China and you have, some politicians, you can copy Amazon and scale it with money, and the politics will protect you, right? So that's possible. But in Africa, I think people are ignoring the innovation part of startups, right? I think, again, when you think of it as a business, what makes startups, I think, unique in Silicon Valley, what used to make them unique, not NM, I think, but what used to make them unique is they come with the innovative edge, right? So Facebook starts, people enjoy using this thing, but we don't know how we are going to make money, right? And then slowly by slowly, they start to figure it out after they are comfortable in the market. They can fail and still, I think that's what, in my opinion, that's what's missing,
Yeah, I think also, that saying, he who pays the piper calls the tune.
That's
So
true,
it's most times when you're, especially the first, or should I call it the first version of VC investment in Africa, it was mostly by investors from the US. Actually, even up to now, there is still, especially for the big funding rounds, it's still mostly foreign investors that are putting in the money. Even when it's Africans that run these VC firms, the money is being pulled. The limited partners of the firms are always from the West. But the thing is, when the first version of investing in Africa, what used to happen is that they used to fund companies that mirrored what was happening in the US, because the VCs needed context. Okay, you're building something in Africa. What can I relate to? So then someone says, I'm building an eBay for Africa. I'm building an Amazon for Africa. But after some time, those companies struggled a lot. And so most VCs started thinking, okay, now we need people who are building actual African solutions. And so I think it's very important when you're talking to a VC, can he get the local context? Because if they don't understand the local context, they're going to ask you, okay, who in the US is building something similar? Who in China is building something similar? Or who in India is building something similar? So they can be able to understand it even more. The best story that I can tell is that there was a time I saw Vusi speaking, and he actually, Vusi.
Who's Vusi?
Vusi, some South African investor.
Okay.
Vusi Thembakwayo.
Okay.
And he said Bob Colimo walked into their fund to raise some money for M-Pesa, when M-Pesa was starting out.
Yeah.
But he was telling them, okay, people can be able to send money the same way you can send airtime. But South Africa has a very good banking system. Actually, even up now, mobile money is almost non-existent.
Yeah, true. That's true.
And these guys were trying to understand, how do you send money, like airtime on your phone? So they failed to get the context, and they walked away from the deal. M-Pesa turned out to be what M-Pesa is right now. But Vos was just saying, like, they just could not fathom. They couldn't understand how someone can send money.
Yeah. No, that makes sense.
So, like, context is always key when you're speaking to an investor, because even if such an investor funds you, you're going to have so many running battles. You want to do something, it's like, no, don't do this, do this. So it's always important that you get people that understand the context for which you're building.
I see. Yeah, one of the other things, by the way, when it comes to context also, that, again, I've struggled with. So I was doing software engineering at university and at MOOC, and that's why you get exposed to a lot of what you say, competitions as part of, like, the initial funding you get, right? And I participated in a lot of those. And most of when the conversation wasn't about what does this look like elsewhere, they want you to develop for, like, the image they have of Africa is the rural Africa, right? Yeah. So they want you to develop something like, this is going to help farmers get their crops. Some subsistence farmer with his farm is going to get their crops in the market, things like that, right? And when, like, right now, because right now I'm investing my own money almost into, I'm getting some help, but I'm investing also a good amount of my own money into my business, right? So I'm more realistic. It's, I sort of know, I'm forced to know what's real, right? And right now, one thing I know for sure is, even in the US, no one is starting up like a fancy startup in Ohio, right? Or in the, like in the...
No one's building from Ohio.
Yeah. No one is building in the rural areas, right? People are in New York, they are in San Francisco, has established itself as the place. But even, Seattle, there are people there building, right?
Miami.
People are chasing, Miami, people are chasing the urban centers, because most of the startups, especially the modern, quote unquote, startups, are targeting people who are willing to live in urban areas. If you're willing to move away from your farm and come to hustle in the city, most people are targeting in the startups, right? So if you're building in Kampala and you tell people, but there are no farmers in Kampala, right? There are no farmers in Wakiso, in the greater Kampala. These are the actual people, the people in Kampala on TikTok, and this is what they're doing. Media, usually you find a border guy and he's laughing about a joke that you also laughed at last night, right? This is what is actually working in Kampala. It's very hard to convince people because that's not Ugandan for them. They feel like, this guy is trying to build Facebook. This guy is trying to build something fancy that's supposed to be built in the US and brought to Africa. And that is where I've mostly struggled with the concept of like venture capital. Mostly, I think for me, in my experience, it has been establish a friendship. Again, as I mentioned, I've been very lucky that I've been employed all over the world. Establish a friendship and try to pitch to your friend, in a bar. Tell them, so this is actually what I'm doing. And when they get it, that's when they're going to open the door up for you a little bit. Actually, this is going to take the conversation a little bit from what we're doing. So for Benue, what are you looking for in a startup?
I think for us, the most important thing, I would say the most important things are three. One, the team. The fact that we're investing in early stage startups, so these are startups that are, still figuring things out. They are going to be, because I don't think this was the original plan for big conversations. You changed, pivoted a lot. So that's the same thing that happens with startups. But having a good team, part of being a good team is when to know to pivot, when to know something is not working, this could work, when to pursue what partnership or not, like when to do some things. So we are looking for a very good team. Who are the founders? What are they building? You're building something in fintech. Okay, that's good. Fintech is good. People want fintech. What's your experience? Do you have any background in fintech? Do you understand the problems in fintech? Do you understand the user problems? Do you think your solution is the best? So we look at a team. So that, actually, when at the early stage, for me, my personal opinion, the team is actually more important than the startup idea, because the startup idea can change a lot, but the team should be able to execute that change when it's necessary. So we look at the team. The second thing that we look for is the scalability. One thing that we know is that in Uganda, the market is small. You're working with a very, very small market. Actually, some friend of mine at NITA once told me that at a single time, there are probably only 700K Ugandans online in like one particular, like basically like right now, how many Ugandans are online? I was telling me the numbers are already 700K, 800K. So it's obvious that's not the number of internet users in Uganda.
I see what you mean. Wow.
But in real time. But what I'm saying is that we have a very small market. So any startup that's building for the Ugandan market only is probably not going to be a very good investment. We need to know that can your idea be replicated in Kenya, in Nigeria, in Egypt, or whatever, at minimal cost. One thing people don't realize is that scale and growth are two different things. With growth, you have to invest a lot. So with growth, when you're growing, your expenses grow almost as much as your revenue. But with scale, your expenses remain almost identical, but your revenue, grows a lot. So we're looking for those ideas, like can you replicate what you're building in Kenya, in Tanzania, in Rwanda, in Nigeria, in South Africa, in Egypt? That's one thing that we always look at. And then the third thing is obviously the market. The industry that you're operating in. If all the people facing that problem, if they use your solution, how much would it be worth? If it's best case scenario, it's like $1 million. I don't think that's a very good investment. But if it's probably, let me just say $1 billion, and then even if you capture 10% of that market, you're working with maybe like $100 million. That's an investment that we look at. I see. So those are the three core things that we are looking for in the startups that we're investing in.
I see. And how do you come to this kind of valuation? Because again, so the thing I've struggled with as trying to pitch to people about that is how to be realistic with. I used to make up numbers and just talk like movie people, but I got bored with that. And because, again, when you're doing the business yourself, you're now more realistic. It's not a dream anymore. It's not a fancy thing anymore. So when you're talking to someone who pretends to know a little bit more about your business than you do, they kind of tune you off a little bit, right? But when it comes to valuation, right, for example, right now what we do here, right? So B Corp is one of the products we do, right? We produce about, I think, 30 podcasts here, just in this room. We just move chairs and, but yeah, for our situation, for example, we have people who sit on the cameras. Today, it's me recording, so I did everything myself. But we have a team, I think, at around 11, they'll start coming in. But what we do is we have two guys, one guy monitoring the sound and one guy on cameras. So depending on the nature of the podcast, we'll have maybe a minimum of two, but usually we have up to 5 cameras recording. And that's just one thing. Podcasting is just one thing of what we do, right? We are looking into music videos. We are working a lot with bars and, generating, basically doing basic content. Yeah. And most of our pricing is individual basis, right? So we don't have a standard price for anything, even the podcast, right? So the podcast, we publish a standard price on our website, but usually when we talk to people, sometimes people want a little bit more than this sit down thing. So usually we charge them a little bit more. Some people want this stand-up, this setup is so easy. So usually if someone wants to do this exact thing, and they don't have the money, we partner with them. We tell them maybe to pay half, and we co-own the content and things like that. We are so flexible with that. But one thing we know for sure is that there is some sort of demand for this, right?
Yeah.
So we know that, as you mentioned, distribution is slightly harder. This 1 hour podcast, if we look at like our Spotify charts, the majority of people listening are from US and Kenya, for example, even found podcasts, right? So we know that that's a problem. We probably have to figure out how best to distribute our content. But then there's TikTok, right? So most of the content we do for bars, for example, the reels, highlight reels. For galas, we do things for like school sports galas, where we do highlight reels. Most of these things are consumed on TikTok, right?
Yeah.
So there's that platform that, may not be like the ultimate platform we distribute on, but now we have an idea how people consume online, right? And there is a good amount of consumption there, right? But when you're having a conversation with a VC, how do you convert that into like valuation figures, basically? This is where we are. We understand where the problem is. It's not unsolvable, but how does that become a valuation conversation?
Yeah. You mean by valuation? Do you mean valuing the company, the startup, or the market?
Yeah. So what you just said, that you want to look at a startup, and imagine $1 billion at least of valuation at the peak. Say for example,
Yeah. I think the most important thing that most people, most founders, do not understand or they don't pay attention to is storytelling. You have to be able to sell your story the best way possible.
Yes.
And you have to make it as easy as possible for someone else to understand. So most founders don't even concentrate on storytelling, but I think it's one of the most important things that anyone can do. So if you tell your story, you put in some figures, some data, some statistics, and things like that, then we, the firm, what we do is that we go out and try to do what you did. We try to come up with our own valuation of the market. Sometimes based on the data that you provided, but most of the time we go
so
out.
what you're valuing is the market more than the actual concept you're being sold.
We do value the market and the startup as well. We value both. So, but what we do is that we go out, and the thing about valuation is that valuation is not a science. It's basically an art. There is no like single formula for how you value a company or how you value a market, but you do it in the best way you think is possible. You can, for example, if you're valuing a company, you can look for a valuation of similar companies. You say maybe you go to Kenya, you're like, well, okay, but Kenya is a much bigger market than Uganda, so maybe half of this company should give us an ideal valuation of this company. You look at what some companies in similar industries have been raising money. Maybe the average is maybe average of a seed round is maybe $50,000 or $100,000. So you just look at some data, some statistics. You speak to some experts in the market, in that particular industry, until you think you'll come with a fair valuation of what you believe, both of the company and of the market. And then obviously we compare it to your valuation. So sometimes some founders, the valuations are way off from ours. Sometimes they are a little bit close, and then sometimes you can if they are close enough, or you think, yeah, it's fair, the founder's valuation is fair, then that makes that investment decision. Okay, now do you think the market is big enough? Do you think the startup is valuable enough? And then that just sort of makes your investment decision. But obviously, it's not just the valuation that decides the investment. There are still a lot of other factors that you're going to look at before you can make the investment decision.
I see. And how do you? So when you think of opportunities to pivot, right?
Okay.
The thing you mentioned, we started this as a podcast, right? And then when we realized a lot more people want to do podcasting with us, we opened it up. And when we opened up the idea of podcasting, a lot more people wanted differently from how we did it. So we opened up a little bit. And, that ended up in most people wanted, say, for example, to do vlogs, but they thought they were podcasts, right?
Yeah.
And so they would come and say, can you guys hire me to do like a vlog? Rather, can I hire you guys to do like a vlog? I'm going to Queen Elizabeth or whatever. And we're like, yeah, why not? And then that happened. And then from there, now we have things that are so similar to like documentaries. We have things that are so similar to TV shows. We don't have like real names for it. But in our mind, we consider that as part of our podcasting product, right? How do you value in pivoting? Is that something that a founder has to add in his story while like having a conversation with you? Is it something that the founders as well go and investigate?
Yeah. I think the most important thing is the reality is you're going to pivot. I don't think there is a single founder who built the idea the way he had envisioned it. But the most important thing is that the founder knows when to pivot. I think it's and pivoting is basically sometimes the market demands a pivot, or sometimes you look inwards and internally and you do the pivot. But not every pivot is worth it. Not every time the market demands a pivot, you should be able to take it. Now, part of being a good founder, because it's not easy to be a good founder. The majority of startups are going to fail. But the few that succeed, it shows you have a knack for the market. You understand the market. You understand the problems. You understand the people that are using your product. So if a founder is able to pivot at the right time, sometimes in the right places, and then they're able to make the most of that pivot. Just give you an example. If you pivoted to vlogs and it didn't work out, that was a bad decision. If you pivoted to vlogs and it worked out, that was a good decision. Now that shows that how well you know what you're doing. And I think pivoting is not a bad thing necessarily. It's what you pivot to that determines whether it's a good thing or a bad thing. There is a Ugandan startup called Sente, with an X. And I think when I talk about founders that have pivoted, I think Sente is one of them. Alan and his team have pivoted. They've been able to stay in the market and look for the best, as a product market fit, basically. But I think up to now they've sort of like figured it out. That's a very good founder. You have to, I like referencing Jumia, but you have to give credit to Jumia. They've been in the market for 10 years. And one of the things they've done is that they have pivoted a lot. They started with
800 million, I can also pivot as well.
It's all about the money.
For Jumia, I think it is. But go ahead.
Yeah, but Jumia has been in the market for such a long period of time. A decade is not a short time in this part of the world. But they have been able to. They started with the Amazon style model. They started by selling electronics. The big ticket sizes. Buy phones, buy things like that. But then they started pivoting to the fast consumer moving goods. Started putting in third party logistics. Started putting in third party advertising and things like that.
That almost everything.
Yeah. At some point, they had real estate. They had hotel booking. They had all those things. But I think I spoke to their CEO I think on Friday, and he was confident that Jumia had now finally figured it out, and he was bullish about the Q1 financials that I think are going to be coming out very soon. And he was telling me that when they come out, you're going to see that Jumia has finally figured it out and we are on our path to profitability.
How is it performing on the New York exchange? I know I know that they opened up a bit of it to the public. Yeah.
When it joined the market, I think in 2019, people were bullish on Jumia, really bullish. And at some point, its market cap rose up to around 3 billion.
Oh wow.
Yeah, it reached its peak around 3 billion, but ever since then it has been a bloodbath. I think it's valued around 400 million right now,
Oh wow.
which is less than the 800 million
Yeah,
they even raised.
yeah.
But part of it, you can't just blame Jumia solely because the entire market has crashed. Almost every startup has struggled, but obviously still, Jumia has struggled more than the others. But
Yeah.
we hope that they've turned the corner, and because if Jumia fails, it will be validation for the skeptics. That Africa is still behind.
Yeah.
If Jumia succeeds, we are going to see a lot more,
I see.
money and competition in Africa in tech and everything.
Yeah, no, so let's actually talk about the money, right? Let's talk about the future of this VC thing. Yeah. So
Yeah.
right now, the grand scheme of things, Silicon Valley Bank crashes,
Yeah.
a couple of banks in the US that are not the big banks. No one knows. Right now, the US government is sort of not saying, but a lot of them are crashing. A lot of them are either struggling or, they're straight out just pretending to be banks anymore, but they're not solvent anymore, right? The war in Ukraine is also sort of putting the dollar at a high risk because a couple of countries are they're thinking maybe the dollar is not the best decision for them because the US is weaponizing it. These decisions are major when it comes to VCs. Silicon Valley has had the money it has had because, well, it's printed next door, right? If you look at, what's the name of that? Is it Citibank? The bank that just has a lot of money, that funds everything.
Credit Suisse?
No, I think Citibank, the big thing that funded WeWork.
SoftBank.
SoftBank, rather. Yeah, SoftBank, sorry. Yeah, SoftBank. If you look at, guys who have a lot of that money, most of that has always been on the fact that it has been favored a lot by the position of the dollar, right? If it happens, which right now it's not it's not like too much guesswork to imagine that the world can dollarize. It's not going to convert to another currency, to another one currency, right?
Yeah.
When the World War ended, when the Second World War ended, and the world is moving away from the British, whatever, to the dollar, it was so obvious. The decision was obvious because of the position the US had put itself after the war, right? But right now, no one country, people are talking about China, but it's probably not going to, people are not going to move away from the dollar to the yuan, especially because, again, there's a lot of politics behind the yuan as well, right? So it's going to be a world of no reserve currency, right? Yeah. And this means a lot of banks are going to fail. That's just basically what it means. A lot of banks that are reserved on the dollar are probably going to fail unless they're doing business with the West. Yeah. And if you look at Africa, for example, not so many businesses here done with the West, right? Sort of we basically just purchase from the West, but there's very few things, selling flowers, selling fruits, that stuff that goes to the West. Most of the business we are doing is either within Africa or in Asia, right? In the Middle East.
Yeah, we export so little.
Yeah. So that means that our banks here, because most of them are backed by dollars, our banks here are probably going to be also very highly risky. What does that mean for venture firms? And I'm not like a finance guy, so I may be wrong about everything I've just said, but I want to sort of understand what that means for.
Yeah, I think if you do you understand the concept of a bear market and a bull market?
First explain that to me. I think I do, but I think it would be helpful for the people listening. Yeah.
A bear market is, okay, in simple terms, a bear market is when, let me just use the stock exchange, is going down. A bull market is when the stock exchange is going up. So basically, market caps are rising in a bull market.
Yeah.
And in a bear market, market caps are going down. So that's like the simplest way to explain it.
True.
Yeah. Now, we had a historic bull run.
Yeah.
Like one of the longest.
Yes.
I think ever since the 2008 financial crisis.
Yes.
The longest bull run. Now, in a bull run, money is available. People throw money at everything. You could go to Silicon Valley and write your ID on a napkin and they would give you money.
Yeah.
Due diligence is like at its worst. People don't truly... So in a bull run, what happens is that the startups or the banks have the leverage. So everyone just wants to throw money at them. Now, a bear market is a difference. It's different. Now, the VCs sort of have the leverage because now the startups... what happens is that when VCs look at the stock market. So the stock market is like the end product of VC money. You invest in a startup, it grows, it IPOs, you exit. Now, if the exit option, which is an IPO, is bad, because no one is putting money in the stock market, VCs start withdrawing their money. But I think what happens is that the historic bull run, that was a long period, man, almost 12 years, we were just having a bull run. People started forgetting about some of the basics. Just basically, people forget about the basics. They just throw money at everything. Due diligence, there's almost no due diligence. And that's why you see maybe companies like FTX collapsing. Because ideally, in an ideal market, you don't fund FTX. You don't fund WeWork.
WeWork, no. I disagree with that totally. I think there's a lot of exaggeration, and maybe the guy himself was a bit weird, but WeWork, that's a grand idea.
No, but you don't fund WeWork.
WeWork, no.
They were signing leases you can't get out of. That's bad business practice.
Anyway, okay. I don't understand this as much as you do, but if I had the money, I would fund WeWork as well.
The concept of co-living and co-working is great. The execution was poor.
Yeah, no, I mean, obviously, okay. If you have the kind of money to buy almost all the real estate, do it. This is what brokers here do. They're not doing WeWork, but it's basically WeWork is doing real estate with that fancy silicon techie thing on it, which is the most stable market in the world. I don't see how WeWork doesn't work in my mind.
No. WeWork was, you go to Ntinda complex.
Yeah.
You lease an entire floor, you furnish it, people start renting, co-renting.
Yeah.
It's
in my mind, that's the same as I go, I buy a plot of land in Gayaza.
No, you buy. You buy.
Yeah, no. So it's the same thing. I go and lease. Like in the US, okay, leasing. Okay, for WeWork situation, it's the same thing. Okay, but let me explain to you how. Right, I buy a plot of land in a neck of land in Gayaza. I break it into plots, and then I sell. Right, or I I lease a plot of land in Tinda. I raise $1 billion building.
Yeah,
and then I rent it out. Right.
Yeah.
This has been the most stable market in the world forever.
Yeah.
Right? This is what WeWork is doing. And then there are obviously the storytelling thing. They're making it look fancy. But in my mind, if you can get someone to give you that much money to do that, that is the only business, okay, in my mind, that I think justifies grow as fast as you can.
Yeah, but my question is, what happens when people don't rent?
Yeah, that's... okay, so obviously there's a risk, but...
as a startup, you have to minimize the risk. You don't amplify the risk. No, but what I'm just saying is that after the historic bull run that we had, I think a lot of basic business principles in the financial world were thrown out of the way, and then COVID happened. So now when COVID happened, people anticipated the new normal. So there was a lot of crash for what they called the old way of doing things. And then the new way of doing things sort of were amplified. That's when you see companies like Zoom, companies like Peloton, those companies that, favored indoor, their valuations shot up. But then people, I think I would just say maybe, I don't know, the experts, I don't know who, but they did not think people would return back to the old ways as fast as people did. But I think human behavior, I mean, we all like what we've been doing. It's not easy for us to adapt to something new. So as soon as we had a chance to go back to what we're doing, people returned. And then they use cases of some of these companies, like especially Peloton and the likes. I mean, Peloton was just a company where you work indoors. You work in your house. You buy a machine. You can work from your living room. Yeah. And the use case of some of these companies nosedived because people would still prefer to go to the gym. You have your gym buddies. You have your whatever. And so some of the companies nosedived. And then once the world was just a little bit trying to recover, Russia invaded Ukraine. And, Russia is a very big player, both in the financial world, because recently there was a Swiss bank called Credit Suisse that was sold for maybe $500 million. Yeah. And Switzerland has historically the best banking systems. Yeah. But then, and what made Switzerland's banking system so good was the fact that they were neutral. I mean, you could steal your money from Uganda, you steal your money from Iraq, you steal your money from where you put it in the Swiss bank, and you're assured your money is going to be safe. But then they took sides in the Russia-Ukraine war. trying to sanction the oligarchs, closing bank accounts. And that was like the lifeblood of the Swiss banking system. So I just think there's a lot of events have happened, and sometime I was talking to someone and they told me they are tired of living in unprecedented times, because since 2020 we've been living in unprecedented times. So I think when I think the banking system thrives on not just the bank, the financial world, it thrives on what would I say? Like stability. I mean, if you're sure what's going to happen tomorrow or the next day or the other day, I think that banking system and the financial system always works fine. But when there's a lot of instability, Russia invading Ukraine, there was a pandemic, there was a what, and now people don't truly understand what's going to happen next. You don't know what's going to happen in 2024. You don't know when the Russia-Ukraine war is going to end. You don't know if China is going to invade Taiwan. You don't know if China is going to strengthen its alliances. What will happen if China strengthens its alliances with Russia, maybe, and Iran and North Korea and all these countries? You don't know what's going to happen when NATO is still hell bent on encircling Russia. So like there are a lot of unknowns, and because when you look at Silicon Valley Bank, its collapse was mainly was driven by people saying, withdraw your money, take your don't put in your deposits. And no one wants to find out what's going to happen after that. Why are they telling us withdraw money? Everyone just wants to run, go and get your money, go and get your money, go and get your money. Before you know it, the bank has to slow down the withdrawals. And then it becomes a full-blown crisis. So it's just a lot of instability that has been happening globally, not just in geopolitics, in COVID and all these things. So they just driven the financial industry to, I think, to a strain, and things are happening now.
Yeah. I see. We're going to come back to that. I wanted also to first have you talk on these new assets, things like a crypto, NFTs, things like that are very tricky to understand, sort of like scams, but with fancy words. What is, say, for example, what do you guys invest in stuff like that? If I came with a very fancy pitch about my Yuvo coin, will you guys...
when you talk crypto, you talk NFTs and other things, you're talking Web3, which people anticipate is the next stage of the internet. I'm not a big fan of Web3, but I can't say I'm an enemy of Web3. I think there are some use cases of Web3, but then to me it's more about I like startups, I like tech, but one thing I don't like about tech and startups is that sometimes the people that build these things get lost in their own hype. You can't wake up one day and you expect the metaverse to be real just because you're trying to make it real. People are buying land in the metaverse. People are, buying NFTs and all these things. But you can say that there's some use cases, but I think I'm a big fan of not trying to skip a process. I'm a big fan of a process. Like, don't just wake up one day and say, okay, we're going to find Web3 startups because it's going to be the new thing in the future. Does it truly have use cases, especially in Africa? Now, in Africa, there are some use cases of crypto, especially cross-border money transfer. We still have one of the poorest cross-border money transfers. Obviously, it's also not a good thing for the government to be in charge of, government controlling your finances. It's not probably a good thing, because if they sanction you tomorrow, they can just close your bank accounts and you're going to struggle to move around and things like that. But at the same time, you have to understand that how many people can truly use crypto in Africa, even if it's widely spread.
So the usability thing is that's one upper way from making it so simple to use, right? That's that's not, for me, in my mind, that's really not a reservation. The thing about, I own some Bitcoin myself, right? And Bitcoin,
I do as well.
Yeah, the concept makes sense. Yeah. But now, even Ethereum doesn't make sense to me. There only needs to be one, right? But that's one thing. The coin, you could make a case about Ethereum. You could convince me. You could persuade me. I've heard a lot, but it's still not. But now when it comes to NFTs, when it comes to these digital assets, then I just start to feel like we are losing any kind of rationality when it comes to this stuff. It doesn't make NFTs don't make any sense at all to me, especially if you look at what the web basically came to do, right? To make things fungible, right? To make digital work fungible. I don't think it's innovative in any way. I think it's actually backward to try and reverse the fungibility of digital things. That's like, to me, that's again, the NFTs, I don't think that can survive.
Yeah, I think what the proponents of the people that make a lot of noise about Web3 is that they're trying to say that Web2, it's the government organizations like the Apples of this world, the Facebooks that own the data.
True.
And then they're promising that they're going to decentralize that power with Web3. But I think I'm just very skeptical. But I don't think anyone can convince me
that So
that's
that's
going to
also
happen.
I think I share your sentiment there. But today, the conversation right now is GPT-4, right?
Yeah.
So today, it's feasible to me, right? So GPT-4 is trained by data from all over, right? So if you're building, and I'm a techie, so if this also becomes a little bit nerdy, you can just let me know. If you're building a model, right, that can be fed by decentralized data, that is building Google that's decentralized. If you build something, GPT-5, right, that doesn't have, so Google data is data that Google will harvest from all over the world and own in their data centers and then use to feed, and then use to feed their search engine, for example, or their other algorithms. But, at some point, the idea for OpenAI was to have this open source, right? So at some point, since they've not done it, someone is going to do it. It's just inevitable, right? There's going to come a large language model that is open source, that is extendable, and some guy is going to build it on a way that it can work on Ethereum, right? So actually, that's the one use case of Ethereum, right? That works on an actual blockchain, right? Yeah. So that's going to happen. That I'm so sure that's going to happen. And what that means is I have my data, I can tokenize it, put it on a blockchain as mine, maybe also another use case for an NFT, put it on a blockchain as mine, and have this model look at that data and learn from it, and then it will do the GPT thing. What people are saying that machines are becoming conscious, blah, blah, blah. It will do that. It will answer questions. And I see that as an actual use case, and I see that as, when AI merges with Web3, I feel like, that will be probably the end of governments because,
I just think that went nerdy real quick.
True. But anyway, there's hope there, right? But in terms of, the world talk about like crypto, mostly as currency and as assets, right? So what, for example, right now, the first NFT, was it the first? The first one I heard of was when Jack Dorsey's tweet was converted to an NFT.
Yeah, the first tweet,
Yeah, and this is stupid. Like, I looked at it, I'm like, why? Like, this is just stupid.
I think it's now almost worthless.
Yeah, exactly. So that's, it, as an asset, as like non-fungible digital assets, there's no use for that, right? As owned, say, for example, data, right? If I can make my data, if I can tokenize it in a way that it's always traced back to me, right? It can be fungible. It's always going to be fungible. There is a concept of copying on computers that will not go away. That's there, right? That will not go away. It will always be fungible, right? But when it's on a blockchain, it can always be traced back to my stuff, right? Yeah, it can always be traced back as mine. That can work. So if you build a model that learns using my data, and this model makes a good amount of money, you can pay me. I think that's what I hated about like Google, for example. If Google is crawling my website to recommend to people, podcasting services, Google is making a lot of money and I'm not getting a share, right? Maybe YouTube, they pay a little bit. But this, and now with ChatGPT, it's even worse because at least with Google, they'll link you to my website. And if I package my website better, I can make some money off that. But with ChatGPT, it will use my data to answer your question. And it will never even acknowledge me, right? So it's just sort of getting worse, but yeah, when this meets blockchain, when people start looking at data, which I think people are going to do, at some point, ChatGPT will need a license to access Wikipedia data to maybe train the next version, or like Quora, which I wonder how that guy managed to figure it out. So, yeah, let's talk about Quora a little bit. Sorry, I know we are jumping a bit. Quora is the answer question thing,
I know
right? When this thing started, I was like, yeah, this is nice, but how will these guys ever make money, right? But now with these LLMs, it is so clear that even if you're like, if you wanted to build a thing that is not as good as ChatGPT, but can answer questions, you can ask and answer. Using Quora data alone, you can build something that's already useful, right? That sort of replaces Google. So right now you can ask Google, I have a headache, what could I be sick of? And Google will query Quora and other things to give you like a good response and maybe suggest a few links. But now Quora can just use this data to train already open source models. To have that like replace Google. So there's like a use case for that. But yeah, I wonder how they figured that out like all those years back, how they were like, this would be like good for business.
I think the founder of Quora is actually is pretty smart.
Yeah.
He was at Facebook. Part of the founding smart Facebook. So he's probably a very smart guy, because I mean, what those guys did when they were in their early 20s, you can't think. You sure have to be smart. So he's probably a very smart guy.
True.
But I have a question. Do you think a Quora for Uganda would work?
I think, Quora is one of those things that only works as a global thing. So a Quora for China won't work. A Quora for the US won't work. A Quora is just Quora because some questions are just universal. That's some of those things, I think there's only room for one. Right? I think that's what Google proved. Even if it wasn't the first search engine, and even if it's not the only search engine, there's only one room for search engine, right? There's only room for one search. That's something you can't silo, like most of that. And that's what I think about Quora as well. I don't see how. So if Ugandans wanted to ask, they can ask Quora. I mean, Quora, you can answer Ugandan questions, right?
Yeah, you can, but I think, I mean, you know that page we had confessions?
Page confessions, my first.
I think it's a Twitter thing.
Is that? Yeah. I think I know
thing.
Sure.
Yeah. So I'm just saying, people ask some of the most weird.
Okay, so yeah, that's not a Ugandan thing though. That's so it's sort of like the topics are a little bit like the radio thing we grew up listening to, where people call into radio. Yeah, no, I think that but that can also get global. It doesn't have to be like you can start it here.
No, I'm just thinking. Okay. Let me try to remember one of the weirdest things I saw on that thing. Someone dreams when they sleep with a snake. Okay, what does it mean? I don't think globally that can be answered.
So that's but it can though. Like, I think if you try putting it in Quora. So I know like a lot of these two German psychologists. A lot of their work was about dreaming, right? Carl Jung and Freud, right? A lot of their work was about dreaming. So if you ask it on Quora, some guy will give you that intellectual breakdown of how it means you have a relationship, you have a problem with your mother and stuff like that.
I think it would be interesting for me to. I don't think Quora releases that data, but I think it would be interesting to know how many Ugandans use Quora, or how many each particular African country. I think it would be interesting to get those numbers, because as much as I think you and I are probably more into tech, so you probably use Quora. Quora.
I do.
But I want to know the more average person, how do they know Quora? Do they use Quora? Just to understand. But I think, like you said, some things are universal, and there's only room for one. I mean, you can't build a Google for Uganda.
Yeah.
It doesn't even make any sense. But just to go back to Web3, for me, there was a time, I think around 2017 or 2016, I was sort of building startups during that time, and I went to the Innovation Village. So the founder of the Innovation Village is called CK Japan.
Yeah, I know him. I don't know him, but heard of him,
Yeah, so CK told me one of the things he has realized about founders is that they think their goal is give to the world. Especially when people are just building, or when they've had some success. And when he was telling me about this, I didn't understand it then, but in hindsight, I've been able to understand it even more. So when about being a founder and about being okay, so the guys in Web3 now are like the guys who are starting the Web3. So they want to be maybe part of history. They want to be the first people to get in and things like that. But at the same time, they believe they're God's gift to the world. So they believe they can do everything and it will make sense later. So, and sometimes they can reference things that used to happen. Like, okay, people thought the email would never work. People thought the internet would never work and things like that. And they try to front that as, okay, if you think Web3 will not work, you're probably like the guys who thought the email would never work or the internet would never work. But so you sort of get lost in your own hype and, delusion sometimes. But then part of being a successful person, obviously, most of the people who have done great things, you must have some bit of delusion. You must be delusional to some extent. Now, 99% of the time it may not work. But the 1% chance that it does, I mean, people are going to remember you for centuries and for generations to come. So I think the guys that are building Web3 sort of envision themselves as, they get lost in their own hype. Now, will NFTs work? I don't know. If they work, they're geniuses. If they don't, they're the dumbest people that have ever walked the earth. Will, almost all these, will crypto become mainstream? Will it be adopted globally and become like one of the, currencies of the world? Crypto, Ethereum, and all these other cryptocurrencies. I don't know. Is it trending there? Maybe. Does that give us can I categorically say that, okay, in the next 10, 20 years people are going to be using crypto? I don't know. And I don't think anyone can make a case for it. I think the industry has been hurt by 2022. I mean, people lost money, FTX crashed, like a lot of things happened in crypto. All these crypto lenders, Voyager, they all crashed, and they closed shop and sort of just left with, and no one you couldn't go to the government because it's not, crypto is not yet a medium of exchange for most governments. So people just, lost money, and you just have to move on with your life. And I think that hurt the industry a lot. But for me, I'm a very cautious person. Even as much as I like tech and I love tech, I use ChatGPT every day, maybe like 3-4 times a day. It has become my new Google because I just love the use case scenario of it. But I'm still a person who believes in rationality. Like, I believe in things, growing. I'm a big believer of the process. So when someone asks me about Web3, that's why I don't say I'm not pessimistic about it. I'm not optimistic about it either. I'm a wait and see person. So I'm just bringing this now. So if someone pitched a Web3 startup to Benue Capital, I think I will. My best case scenario is that I would just abscond from that deal. I said, nah, I'm not making this investment decision because I can't truly, vouch for the industry. But then I also can't truly, speak against it. I just think that if Web3 turns out good, maybe it will have a use case scenario, then well and good. If it doesn't, a lot of people will go with it.
Yeah, I think for me, when you think of the protocol, right? So Web3, let's call it Web3, right? The idea of having things decentralized on a blockchain, right? I think definitely that has potential, right? And that is definitely going to become big, right? But what the problem is right now, and I think what is so close to what I was asking was the financing around it, right? The FTX thing you mentioned, right?
Yeah.
That never makes sense. Like in a million years, that for me never made any sense, right? Even a lot of apps. I know the Twitter guy is doing an app, a social network that's decentralized, right? Even if you build a tool and you have to tell people that this is the protocol, right? That means whatever you're building is probably not good enough, right? If you have to build a coin, like I remember one coin probably wasn't even on a blockchain. If you have to build a
one
coin,
one coin was a scam.
Yeah, exactly. Yeah, it was a scam. Yeah, if you have to build a coin, and instead of telling people this coin actually buys and sells stuff, but you're telling them, oh, this is a blockchain, you're telling them like the technology that's building the coin, and that's your pitch.
Yeah.
that's probably useless. Like, it doesn't matter what, if it doesn't have to be Web3. You know, if I had to build an app and come and convince you that I've built this with Kotlin and I've built it with this one, so on, so yeah, that won't make any sense to you because you're not interested in that, right?
Yeah.
But if I came and told you, this is the app you use to, schedule a podcast or whatever, it doesn't matter what technology I've used to build it. It works for you because that's what I'm building, right? And when Web3 reaches that point, where people don't care about how it was built, but rather that
It works.
it works, I think that would be a cool place. Yeah. And, like some of the things would be features, right? If people asking about security or privacy or whatever, that's when you can say, oh, this is actually built from the ground up to enforce decentralization, to enforce things like that. And that makes sense.
Yeah.
But for now, most of the conversation is, oh, this is Bitcoin based, or this is blockchain based, or this is Ethereum. And whenever I hear the word Ethereum, I just switch off also. I'm like, yeah, this is probably not worth paying attention to. But yeah, let me also ask you about the next thing, right? In terms of investing right now in Africa. So large language models, machine learning, AI, people are calling it AI. But I think right now what the things do is learning language, right? So what appears to be sentient about ChatGPT is the fact that it has read so many words and responses, and it can match them together. And so when you ask it a question that seems emotional, there's someone in the web who has phrased it in a different way that it can match and give you a more emotional response that most people think is reasoning, right? But it's mostly large language. That's what they call it. Large language models. It's mostly learning language, right? It's very, very useful right now, right? So if you combine large language models with computer vision, there are so many applications, like even computer vision alone, right? If you look at, say, for example, in Rwanda, I don't know if you've been to Kigali.
Not yet.
So in Kigali, the cameras, right, will see your speed, and they will let you know that you're going to be given a ticket right away if you have a speed on the road. So most of their roads have a 60 kilometers per hour limit. The border guys here, the way they swerve, the cameras will get them. Yeah. And so the camera in front will see that you're swerving, you've stepped on the line in the road, but it's the camera behind that will take your number plate. Yeah. And so the technology is right now, like, it seems sophisticated if you're from Kampala, but it's at that point where it will be able to match immediately that the picture of the guy who's swerving from the camera in front is the same picture of the number plate. And so they'll SMS the border guy a ticket, right? So that computer vision thing went had just come. It used to, people used to think, oh, this is the end of humanity because now machines can see, right? But now we know maybe that's not even the frontier of AI. That's not the best thing AI can do. Seeing is just one thing. But if you combine, and I've seen a couple of TikToks again about applications of computer vision in, say, farming, where you build this robot that will sow tomatoes.
You're saying that stuff on TikTok?
Yeah, so TikTok has everything. That's the thing. TikTok, I actually don't have TikTok, but it's a big part of our business here. So I have to keep up to date.
It's interesting.
I use Google Shorts a lot of time, which is also stuff they steal from TikTok. Yeah, but so most of what we do here is making sure we understand what content is going to be the next big content on TikTok for Ugandans, and we try to be part of that. So that's why I have to be mostly up. But on TikTok, for example, right, or on those short videos, you see a robot that is sorting tomatoes. It has computer vision and simple commands that say if the tomato is not red enough, red to this extent, kick it out. Yeah, and all it does is, like, the robot arm is just, its job is to pull back and forth. Yeah, so it's not very complicated to build, but then this model that just can recognize a ripe tomato and not is the only sophisticated part of the robot, right? And this is like cool stuff, right? It's the usability is there.
Yeah.
If I'm coming to sell to a farmer this robot, I don't have to tell them that it's AI and whatever. I'll just tell them this robot can help you sort out the what?
The tomatoes.
Yeah, the tomatoes. And that is, the use case is so clear, right?
Yeah.
And so you understand, like, AI for it, at least right now, people know that that's usable. Something you're saying with ChatGPT, for example, which is maybe, like, right now it's the frontier, it's the best among the best. It's easy to see that, if I wanted, say, to start a proposal, I don't have to start from scratch. I'll tell ChatGPT, I'll prompt it. I'm writing a proposal about this, and this. Give me a template. And it will use the language it has learned to generate a template, right? The use case there Makes sense. So if I came to Benue, right, and I told you guys, this is what we're building, because actually this is what we're building here, right? This is, we are building the next image processor.
Is this a pitch?
Eh?
Is this
No,
a pitch?
no, well, I'll come to you with a pitch, but no, I'm saying, right? And this is also a big struggle, right? So for example, a big part of what we do is photography as well, right? So you go to someone's wedding, you take pictures, you spend about 3 hours, no, not 3 hours, about 3 days sorting through the pictures to see which pictures are reasonable. So you take about maybe 2,000 pictures. Yeah. Then you come back and you have to deliver about, say, 300, right? So maybe 15% of the pictures or so, right? You have to come and sort through 300 pictures to see which ones work, which ones need slight modification, say, to crop them. So you select these 300 pictures. So when you've selected the 300 pictures, you need to retouch each of them, right?
Yeah.
So the bride doesn't want to have any pimple, right? She wants to pretend she never had a pimple in her life. Things like that. There are things that people don't do a lot, but also you could modify. So sometimes the smile in a bad picture was a good smile. Say a picture that was out of focus has a good smile. The picture in focus has a gloomy face, right? So if you have no other good pictures, sometimes you have to spend time getting the smile from so using Photoshop, right? Getting the smile from the bad picture and placing it on the good picture, so you have one good picture, stuff like that. A lot of that stuff can easily be done with image processing AI. Yeah, so there's a couple of AIs, a couple of rather tools online for subscribing for that can do basic retouching, right?
Okay.
But this is the business we are in, for example, right? This is the business we are in. We know the process, and we can build. We are building an end-to-end system. Selecting pictures, take your pictures, put your card in the computer, start the program. It will select, it will know which pictures are good for a wedding or for whatever event you're doing. It will know which ones are bad. It will replace features that are bad, and it will give you to review, right? And then at some point, you're also going to build the retouching. So there's a lot of tools that are doing the retouching. That's why we don't want to focus on that, because you can just use other people's tools. But at some point, you're going to do the retouching as well. So put your card in the thing, start the app, and email the images the next hour. Okay, maybe it requires a big, most of them require some sort of GPUs, huge resources, so it takes a lot of time even on a big computer. But if, say, we are using AWS for our GPUs, then that's very straightforward. Upload images on a web server and then deliver them as retouched, right? This is very, very obvious. But the problem is, if you're going to pitch this to people, okay, I'll come and pitch it to you. I'm going to come up with a serious proposal and come and pitch. But most of the people that I've been talking to, they feel like this is not an African thing. This is not for Africa to do, right? And this is a consumer thing. So when we have it ready, obviously, we probably think we can put it on the market and have the market decide. But we're at that place where it's very hard to convince people, because, again, for example, we need to have this to work in a way that's efficient. We need to buy some servers on AWS, and quite good servers that have like a good amount of GPUs, so they can process these images well enough, right? So for one image you can see, but to train the model well enough, you need about maybe 100,000 images. And if you're going to use the biggest gaming machine here, for example, you're going to spend maybe say 4 weeks having the machine run on and hoping Umeme also won't disappoint you, right? So like those small things where I say, you know what, give me 3,000. I need 3,000 per month to pay AWS, so I can have the model train. It will take maybe 2 months to train and be tuned fully, so it can have like the first version of the thing. But that's
I think one thing people don't know is that raising money is probably going to be one of the hardest things you ever do. I mean, if you're building anything, it's probably going to be the hardest thing that you'll ever do. But then also you have to recognize what are you building. So if you're building a novel concept, okay, might not be truly novel in in a global context, but in by geography, you have to know that if raising money was 60% hard, then it's going to be probably 90% harder for you. Let me just give an example. Just imagine Mark Zuckerberg pitching Facebook in 2000. All the guys of Airbnb pitching Airbnb in 2003 or 2004, whatever year it was. All the guys of Uber, walking into our investors' office and telling him, you can get into a stranger's car. They'll be like, what?
Yeah.
Airbnb, you can sleep in a stranger's house. What? So you have to understand that most people are going to look at you like, nah, I don't think this is for me. Maybe you can go and get someone. And I think they'll even go and tell to some, talk to their friends or something. Like, can you imagine this guy came and told me you can sleep in a stranger's house, or you can, take a ride in a stranger's car, because it's unfathomable at that stage for someone to think about it. So I think you have to recognize that in Africa, our innovation is still poor. I mean, people in Silicon Valley can take a risk on big things. I know in Silicon Valley there are people building wild ideas that need funding for 10, 15 years before they even start making a profit, because they're going to experiment, to make tries and things like that. But in Africa, people don't have that much tolerance. Someone would rather build an apartment block or something. So if you're raising money for a very novel idea, at least in this part of the world, you're going to know that, one, you have to be lucky. If you chance on someone who understands AI and machine learning, they are probably going to listen to you more, and they're also going to guide you better. One of the partners of the farm actually is pretty knowledgeable in AI and machine learning. That has been his field for a long time. So I think if you meet a person like that, he's going to be able to listen to you and understand. He will know that, okay, yeah, I know the use cases, I know why this is important, I know why. But if you're pitching to someone who maybe just does whose background is in e-commerce, or is in fintech, or is in what, he's not going to sit down and say, nah, let me look at this thing, let me see what this thing can do. He's probably going to shut it down first meeting. So as much as you're raising money, or anyone is raising money, any founder raising money, it's important to do due diligence on the VC firm that you're pitching to. Like, do these people understand what you're building? Do they, look at their portfolio. Sadly, we don't have a portfolio yet. We're looking for our first startup. But it's important to look at the portfolio. You see, what are they funding, or who are they funding? Have they funded people in doing something similar? It may not be the same, but maybe you see a company that is using AI to do something, that pick tomatoes, like you say, and then reach out to these people and ask them, hey, have you guys gotten value from this investment? Then they can tell you, oh yeah, these guys are big on AI, these guys are big on machine learning, they understand the space, they have someone, maybe a consultant or someone who they talk to. So, and I think a lot of people, when they're funding, people are raising money, almost anyone, what they do is that they just focus on the numbers, like, okay, I'm going to pitch to 200 people, and maybe 2 or 3 will accept. But then if you're pitching to 200 wrong people, you're probably going to get 200 no's. But then if you streamline the people you're pitching to, you may need to pitch maybe to just 5 or even 10. Like, get VCs, you're building something in AI or machine learning. Okay, so instead of wasting your time trotting up and down, countless hours on Google Meet and things like that, just get someone, sit down, look for VCs that understand AI and machine learning, who have invested in AI and machine learning before, and then you narrow it down, and then you pitch to these people. It's going to make the journey less harder. It's going to make even the questions they'll ask, because if you pitch to someone that doesn't understand your industry, I don't think I'll be able to ask you the best questions. I don't think I'll be able to provide the context and everything. I'll ask you some of the weirdest questions. Basically, the questions those guys in Senate ask tech companies when they come, when they come to the thing. So it's important for you to, as a founder, as someone who's building, you understand, what you're building. So now you have to find the VCs or the investors that have at least some context of what you're building. It will make it very easy for you. But if you just say, okay, I'm going to talk to 100 people, talk to someone that's probably never used AI, probably doesn't even use ChatGPT in his life, and even if he uses AI, you will probably never know that this is AI. How is that person going to, like, the learning curve is going to be too steep for him, and then most VCs don't have that patience. It's not like they want to invest in something they don't understand. They want to invest in something they understand. And so you're pitching AI, machine learning, use cases and things like that. Someone's pitching something straightforward. It's pitching an e-commerce company or a fintech or something like that. I see what you mean. Yeah. And then what happens is that most VCs have something what they call like a pipeline. They will look at the companies in the pipeline. They're like, okay, who should we give attention to first? The fintech. the, you know, the e-commerce company, or maybe something in health tech or something, because they understand the startup. You don't need to explain a lot for them to understand it. They understand, they can figure out the market, they can figure out the valuation, they can figure out the potential, they can look at the team and things like that, and then they will know. It's easy for a VC to understand. Of course, some VCs go out of their way to understand an industry. I mean, making something in AI, he's just intrigued, probably hires some consultants, speaks to some people, until, I mean, when you come to pitch, they invite some people to join them in the call so that they can be able to ask the right questions. So some VC firms go ahead and do that, but the majority of them may probably not do that. They will prefer to invest in things they understand even more, and things that are a little bit maybe straightforward. But then some VCs also recognize that if you don't understand something, and a lot of VCs may not understand it, it may probably be the billion idea that you're looking for. So they go out their way to try to, to understand, hire consultants, hire consulting firms, hire someone to do due diligence for them on that part. But I think the best thing that you can do is to pitch to VCs who understand what you're building. Like, it's very, very important. So that you can, the learning curve and everything is going to be a little bit easier when you do that.
No, okay. I think that makes sense. Let's talk about discovering you, right? Say, I'm an entrepreneur, I'm looking for VCs. How do I get to know about Benue?
So we call that deal sourcing. So most of the time is that we meet people building.
Okay, so it's you guys who do the discovery.
Sometimes they reach out to us. I can meet you at an event. Just a discussion. I could be talking to you and you say, I know there are these guys building something nice, and I'm like, please give me their contact. But then some people just send pitch decks on our website. So they just go like benuecapital.com.
Okay.
And then they can send a pitch deck. So we look at the pitch deck internally. We try to do some initial research around the company, and then if we feel like, okay, this is, let me just explain the entire investment process.
I think.
So the deal sourcing is, we reach out, or you reach out to us, maybe through our network, through your network, and then when we get the pitch deck, we look at it internally. We say, okay, is this so we sit as a team, we're like, is this good for us? So we do some initial work around some research, and they're like, I think we should talk to this guy. So the next step is we talk to you, you pitch. So after pitching, in the background we're writing down stuff. We have like a system where you're writing down what do you think about the founder, what do you think about maybe the market, what do you think about all those things. And then after the call, we step back and we just discuss, okay, what do you think about this founder, what do you think about this person. And so after that, we send you something like, okay, send us this, because now we want to know everything that you know. So we ask for any material, like a pitch deck, links, user testimonials, everything that we think is important. And we maybe take like a week or two just looking at that material, looking at that stuff, trying to do some research, trying to understand the industry even more, try to understand the country you're in. We try to understand the legal requirements that you have to take and things like that. And then once we feel like, okay, this is time to go to the next stage, now we invite you again for another call. And in this call now, we in the first call we ask mostly generic questions, but now in the second call we are asking a little bit more like expert questions, so that you can show off your domain, that you're good at this. And if we think the conversation has gone well, and we think this is a deal that we think can give us the best returns on investment, we go ahead and start to do what we call due diligence. Due diligence can even take a month or 2 months. We are now talking to, if a company, let me say, is in Uganda, I go to the company offices. I try to look at their financials. I try to look at all these things. I talk to users. I test their app. I test their product. I test their service. I probably share it with other people in my circle. So it's a lot of work that you do. You can look at the licenses. Maybe it's a fintech. It requires maybe some Bank of Uganda licenses and things like that. So you look at them. It's due diligence is just basically you're verifying whatever this person said.
I see.
Yeah, and then once we believe okay, everything is in place, we send a term sheet. So the term sheet is just like a a document that shows, okay, we want to invest $50,000 in your company for 7% of your company. And then there are so many other terms that are in the term sheet. But those are like the highlight terms that are always there. And then it's up to the founder to accept the deal or to send a counter offer. So the founder can be like, nah, I'm not giving you 10%. I think we can do 5%. So that negotiation is basically what we are now valuing the company. So if we are giving 50,000 for 10%, it means we value your company at 500,000 USD.
I see.
If you send, you know, if I'm giving 50,000, I'm giving 5% for 50,000. It means you as a founder, you value your company at $1 million. So like a post-money valuation after we invested in you. So we can negotiate until we reach a middle ground. Or if we fail to reach a middle ground, we can both walk away from the deal. But in case we reach a middle ground and we're happy with the terms, the founder is happy with the terms, and then we can sign the investment.
And then you guys just put the money on my bank. And
then we wire the money.
Okay, So
but also as what we do is that we invest mostly in Ugandan companies or Kenyan or whatever. But ideally, we want this company to be domiciled in Delaware. So that probably the transaction is between a US entity to another US entity, and then maybe the company you can transfer the money from Delaware to your bank account for your operations.
I see. Okay, I see. Oh, yeah. I think that in Uganda, is there any kind of anticipated legal restrictions with that?
Yeah, actually, in Uganda, our legal, investment laws are some of the poorest in the world. It's almost impossible for you to invest in a Ugandan company, as a VC firm, because most of the bodies that even regulate don't really understand venture capital, private equity. They don't understand what this kind of risk that you're taking. So they have no idea how to regulate it. I think there are some. I'm not an expert at it, but my consultation with some lawyers is that I think it's Capital Markets Authority that struggles with regulating, this kind of companies.
I thought there was an investment authority, something like that.
Uganda Investment Authority? Yeah, like it's a bunch of bodies doing a lot of nothing. So it's a little bit now for people to be able to mitigate the risk. They require you to invest in they invest in US companies. So domicile in Delaware, you can domicile in Mauritius or the UK. These are countries that have favorable laws. So that if because as a VC, you need to know if maybe the founder doesn't use the money well, some fraud or something. I mean, you trust the US justice system,
I see.
But you can't trust the Ugandan justice system.
True. Yeah.
So I think that's why they always insist, please domicile in Delaware. Then we'll wire the money to the Delaware entity. And then since the Ugandan entity is a subsidiary of the Delaware entity, you can then transfer the money.
To the Ugandan entity. Okay. That makes sense. I see. All right. So, we'll add the link for people in the video to see. But basically, for people who want to reach out, that probably is the best place to start. Click on the link and then the back and forth will continue.
Yeah, that's what we mostly do. But obviously, I think sometimes people are a little bit impatient because they send to that, they expect you to reply tomorrow, but ideally you'll have a backlog for pitch decks that you're looking on, because you have to look at each pitch deck.
And give it the attention.
Give it the attention. So sometimes it can take maybe a week or two before you can get a reply.
I see. And I know you guys don't have a company yet. Are you able to share how, you don't have to share how many or whatever, like which field has more potential from the pitch decks you've seen or from the people you've interacted with?
We can't say particular field has more potential, but I think the pitch decks that we're receiving, Ugandan startups are struggling a lot. I mean, you can see why we don't raise so much funding, for sure. When you compare it to Kenyans and Nigerians and South Africans and Egyptians, you can see where Ugandan startups struggle to raise funding. So I think with Uganda, one thing we recognize that venture building is going to be important. You can see startup with some potential, some good potential, but then they need a lot of guidance. Now, most VCs don't have that patience, obviously. But I think with Uganda, the fact that this farm is funded by Ugandans, there is that attachment, that emotional attachment. And I think there's a lot of nice, good startups here. They just need the guidance. to get to that level. So we are getting in sector. It's not a particular sector. It's more of the geography.
I see. And you mentioned that you want to be. Is it called series? The first guys. Is it series? Oh, before pre-series something. Whatever.
Seed.
Okay, seed. Yeah. So you want to be at that place, right?
Yeah.
So ideally, you're looking at startups that at what place? Are you looking at what stage of business, basically, right?
Yeah.
Would the startup be at to be considered by you?
Yeah. So we are. Yeah, we think we are going to be the first check you ever get from investors. So for the most startups, they probably just started making revenue, gained some traction. They have figured out the product that the market desires, and people can pay for that product. So those are kind of the startups that we are looking for, and these are startups that are looking for pretty much small checks, $20,000, $50,000. But obviously we recognize that then there are some other startups that are much further along the journey, that have built a good product for maybe 2 to 3 years, and they would require maybe $100K or $100,000 or more, and we fund all those startups. But for the startups that are starting, that's where our strategic guidance comes in a lot. So we operate almost like a co-founder in the business.
Yeah, and I think that's quite interesting. Yeah. I think that actually was the biggest question is the stage. I know besides competition, most people who are willing to fund want you to have something that's beyond just like a prototype, right? Something that's already in the market and it's sort of established.
No one wants to fund an experiment.
True. Yeah. So yeah, this makes sense. And maybe for the last question, are there any specific challenges, besides what you've mentioned about having about the ignorance around our investment bodies, right? Are there any specific, say, people like challenges, not necessarily institutional, but challenges that are so specific to Uganda or to like African countries that
Yeah, I think I'll speak for Uganda. One thing that we recognize from founders, I think most of them are used to raising grants, impact investors, and things like that. So when they want you to invest in them, it's more of an emotional thing to them. Yet the VC world is rational.
I see.
I'm not going to fund you because you're Ugandan. I'm not going to fund you because I like you or because I want this ecosystem to grow. I'm going to fund you because I need to make returns. One thing that people don't understand is that VC firms raise money as well from people.
Yeah.
And these people are giving you their money so that you can give them a return on their investment. If someone put in $500,000 in the fund, he probably wants to make 1.5 million in maybe 5, 6, 7, 8, 10 years. He would. There are very many other options for where this person can invest their money. So when I'm funding you, I have to sit down and say, okay, can this guy make us money? Can this startup make us money? And people are used to the grant model so much because the people that provide grants may not truly care about the returns.
Yeah.
They just care more about meeting their targets. Yeah. So probably the MasterCard Foundation wants to write they invested in 100 companies or whatever. So they will just tick those things off the box. But then for me, I'm looking at the returns. Because one thing that we recognize is that if I invest in a company, if Benue Capital invests in a company, maybe you write a check of $30,000 to this company, for us to be able to make money, that company has to be able to raise follow-on funding at bigger valuations.
Yeah, I see.
So if we fund you and you can't do that, we are going to get stuck with you on our portfolio. No returns, nothing. But so people have to realize that VCs want to make money. It's about returns. It's not. It's not about. I mean, it's not because I don't like you that I'm not going to invest in you. I have to sit down and realize, will this make money? Will the partners be able to report back to their LPs that they've made money on this return of investment? And I think that's one thing people don't recognize in Uganda. And also, another thing that we face is that people are so ignorant about venture capital. Like, a lot of founders do not understand about anything about venture capital. They look at investors and they have no idea what an investor wants. They have no idea what you need to invest. I mean, what you need for an investor to invest in you. Like that investment readiness. and then they have no idea how the entire VC model operates. You know, like a lot of founders are building, but most of them have never looked at a term sheet. It doesn't know a single term on a term sheet. They don't know about funding rounds. He doesn't know when to raise a Series A or a Series B or a pre-seed or a seed. They don't know what's trending in the market. They don't know, maybe we're in a bear market or a bull market. Who has more leverage? Is it the founders, the VCs?
Yeah.
And then also one thing is that what causes that is that, an effect of that is that people are raising a lot of money. I mean, a founder pitches to you and he wants $150,000. But when you look at his company, like, hey, if I give you $150,000 for 10%, you're valuing your company at like $50 million. Can you justify this valuation? I mean, and because this founder has never tried to even measure valuations, like how many companies in Uganda, how many startups in Uganda are worth $15 million? How many startups in East Africa are worth $15 million? Look at the startups that are worth $50 million. How big are they? How big is their product? How big is their team? How big are their operations and things like that? Is it the same as yours? So it's not just about waking up one day and you say, oh, I think I need $100,000. Can you break down what you're going to use the $100,000 for over what period of time? And then if you raise that $100,000, what will you be able to achieve at the end of, you said it's going to take you 2 years. What are you going to be able to achieve after the 2 years? So I think those are some of the challenges that we faced. I was at an event on Friday in the morning, and I was trying to tell people about Benue Capital and what we do. And some of the questions they were asking me were ridiculous. You could tell that, okay, this guy has probably never met an investor in his life. He has probably never. So there's that ignorance that we are. Idea, I would put myself in the situation of Ron Kawamara when he was at Jumia. You're teaching people what e-commerce is and how it works. So we are also teaching people how venture capital works and how the whole thing works. And if you don't know what you're getting yourself into, then you're probably not going to get a good deal.
I see.
If you're a founder. Also, you're probably going to be very unrealistic. You don't just wake up and say you want to raise 100,000 or 150,000.
I see.
You have to be able to justify the amount of money that you're looking for. You have to be able to justify the valuation. And so those are some of the challenges that we faced. But I think at the end of the day, that is just a characteristic of a very nascent startup ecosystem. So in Kenya, you don't expect to face the same problems. But what you face in Uganda, you'd expect to face that in Tanzania or maybe Rwanda as well. But you go to Nigeria, South Africa, to Egypt, to Kenya, these are much bigger markets. Ghana, more advanced markets. But then you look at Uganda, you're expected to be teaching. A lot more teaching, a lot of teaching
so
than actually executing.
Pioneering, you're starting from scratch,
Yeah, we are the first VC firm here, indigenous VC firm here. So,
I promise that will be the last question, but let me just ask the one more. We've had also conversations with people, for example, who are interested in, who are projects, not companies necessarily, right? So, part of what we do here, for example, is short films, right? But we've had people with big budgets of like feature films, concepts that seem like they would make really good films, but they want some money. And compared to how much Hollywood spends on films, it's not a lot of money, but it's significant money. So people would come and say, can you give us, say, the equivalent of $60,000, right? $60,000 to make a film. And the budget is clear, the plan is clear, the story seems good, and some of these movies have animations, so it seems like everything is it's probably worth the money, right? But obviously we don't have 60,000 to give people. If we had 60,000, we'd be spending it ourselves, right? But we don't know how to recommend, because some of these conversations are so interesting that you don't want to tell the guy, I can't help you. So most times we promise, we tell them, hey, I'll talk to some guy, even if you don't know anyone who has 60,000, right? Is this like a thing that would be interesting for you guys?
No.
No, okay.
I think we can't fund everything, and we have to fund what we know exactly and where we can provide the guidance, strategic guidance that we think we can. But I think if you're building something in movies, there's probably some people that fund that, so they will be able to. And those people will not fund a startup. So I think everyone just needs to stay in their lane, and that's probably it.
True.
But for me, my understanding is that raising funding for anything in this part of the world is difficult. It's not easy. But I think what sets people apart is when they're able to raise it. So if you're building something in, a documentary, a movie, and you're able to raise funding, it's probably validation that what you're building is good, or maybe someone believes in what you're building. But please don't pitch Benue Capital.
Yeah, sure. Jonathan, thank you very much for making the time to come to this podcast. I've enjoyed this conversation so much. I think I'm going to think about more things, and we're going to keep in touch and talk more about this. And we'll also send our pitch deck, by the way. It will come to the link. Thank you. Thanks a lot for making the time.
Yeah, I think this is great. You guys are I watch your. I watch them on YouTube. I don't go to TikTok or Spotify. I must watch them on YouTube. And I'm just happy to be here. Great to share knowledge. I'm speaking about a topic that's not oftenly talked about, so I'm just happy to share anytime I get.
Yeah, no. Well, I think we're happy to have you, because this is going to be very helpful to a lot of people that we interact with as well. So a lot of our the people who watch our podcasts are usually within this space. They're starting something. They're looking for money to start something and things like that. So that's. I think this will be very interesting. Thanks a lot.